And welcome back. I noticed that Realtor.com released a weekly housing market update today at the time of this video, which is the 15th of September. I'm going to be going over this report with you guys because there's some very interesting trends we're seeing right now in our housing market that's going to affect our housing market for the remainder of the year here, in my personal opinion here. So let's go ahead and dive right into this video here. This is a report again that was released today at the time of this video, which is the 15th. And this is their synopsis or their analysis regarding their latest housing trends we're seeing right now. But as you guys all know, I'm a housing market data nerd. I'm not going to be looking over or reviewing their analysis. Instead, I'm going to be sharing my own analysis based on Realtor.com's latest housing market trends. So if you go to Realtor.com/research/data, it takes you to this website right here. So here's what you do. Go to Inventory Weekly right here, and then click on this link right here, which gives you weekly housing market stats regarding home prices, inventory, new listings, etc. And also some trends in here as well that normally Realtor.com does not touch on in their weekly analysis here. So if you click on that link, it takes you to more or less this right here. I spent several hours analyzing this data for you guys to share the latest housing market trends we're seeing right now. But this is the data that Realtor.com is sharing with us today. And the most recent week we have is for the week ending September 10th, which, by the way, this includes the Labor Day holiday here. So some of these numbers here are going to be a little bit skewed because of that. But let's go ahead and dive right in because there are some very interesting trends we're seeing right now. So today we're going to be talking about home prices, active listing inventory or housing supply, and also days on the market. In other words, the time period when a home seller accepts an offer from a home buyer, and also the number of new listings as well as the number of price reductions. And all these numbers are based on year-over-year changes. For whatever reason, Realtor.com in this data sheet doesn't share month-to-month changes. They only share year-over-year changes on a weekly basis. So here's what they are reporting here. Take a look at this. Right now, they're saying that the median list price, in other words, is the median asking price for houses that are being listed for sale, is only up 11.7% from the same week 1 year ago. This is still above historical levels. It's more normal to see ranges in the range of 3 to 6% for home prices and not 11.7%. But if you look at the trends this year so far, an 11.7% gain is the lowest levels since late January of this year, when we also had a 11.7% gain in home prices. I should say asking prices. But take a look at this because this is pretty remarkable though, because 11.7%, this is far lower compared to basically May all the way until July, when the gains were in the range of 15.5% to around 18% on a year-over-year basis. So one thing I want to mention, I mentioned this in a lot of my videos here, it would be entirely normal to see home prices soften for the remainder of the year. It's entirely normal for a housing market to really wind up February all the way till we hit July. But after that time, it's entirely normal to see less new listings hitting the market and also home price growth to slow down as well. And here's another interesting trend we're seeing right now as well. And this has to do with housing supply, the total number of houses listed for sale on a year-over-year basis here. Because check this out, for the past 12 weeks, inventory growth has been stagnating in the range of 25 to 30% gains on a year-over-year basis. But we're not seeing this giant increase in the number of houses for sale like we did in the first half of this year. Because take a look at this. On May 7th, as I shared in other videos here, we more or less had the same number of houses for sale compared to the same week 1 year ago. And the growth absolutely skyrocketed until we basically hit July of this year. And part of the reason for that was obviously due to a pullback in home buying demand. It was taking longer for houses to sell, and therefore inventory growth was increasing. And also we saw an increase of new listings as well. And you can see that right here because really from the end of April all the way until the beginning of July, we had more new listings hitting the market compared to the same time period 1 year ago. And that, coupled with a pullback in home buying demand, caused inventory to increase greatly during this time frame. Something else worth noting here is that the changes in housing supply this year has been very, very remarkable because take a look at this. Again, for the past, 12 weeks, we have inventory growth in the range of 25 to 30%. But look at the beginning of this year. On January 1st, we had more or less a 30% less houses for sale compared to the first week of 2021. And we had double-digit decreases in inventory growth all the way until the middle of April. So the changes are quite remarkable because of this pullback in home buying demand and also this increase of new listings. But again, more recently though, we're seeing this decrease in the number of new listings compared to 1 year ago. So take a look at this. For 10 consecutive weeks, we've had less new listings hitting the market from 1 year ago. And this is one reason why we're seeing this stagnation of inventory growth right now. And again, because of our seasonality of our housing market, it would be entirely normal to see less new listings hitting the market for the remainder of the year. That's our seasonality of our housing market, where a lot of people list their houses in the first half of the year and not so much in the second half of the year. And that's why we're seeing this decrease in new listings. But remember, this is the year-over-year changes in new listings. So the growth rate or the decrease in the number of new listings is more pronounced this year compared to last year. So I have a couple theories regarding why we're seeing less new listings hitting the market right now from 1 year ago. Again, for the 10th consecutive week, according to data from Realtor.com. So number one, this is something I've been talking about on the channel for several months. I would say for the majority of this year, we're seeing this giant increase of mortgage rates, right? So right now, mortgage rates are in the range of 6.3 to 6.4% for people with excellent credit. That's the national averages right now, according to the Mortgage News Daily and also Investopedia.com. So because of that, we're seeing a lot of people who have mortgages of less than 3%. On top of that, we have a lot of homeowners who have mortgage rates of less than 4%. Personally, I have a mortgage rate of 2.6%. Why would I sell to move into a 6.3% mortgage rate when I have a 2.6% rate? Therefore, people like myself have very little motivation to list their house for sale and buy a new house or even rent because of that. That's number one. Number two is that a lot of people are becoming more pessimistic regarding our housing market and the economy as a whole. Homeowners right now are looking at, okay, should I sell and buy? If you buy, home prices are very high and mortgage rates have increased over 3 percentage points in one single year. I mean, rates were at 3.3% on January 1st. Now they're 6.3%. So if someone's selling their house and buying a new house, it really doesn't make a whole lot of sense for doing that because mortgage rates have increased so much. And of course, home prices as well. I'll give you an example here in just a little bit. So that's number one. Also, we're seeing a lot of pessimism regarding the economy and also the housing market in general. The Fed is going to be increasing the federal funds rate next week, and it's going to be interesting to see what they do for the remainder of the year for rates right now. In any case, take a look at this. This is according to Fannie Mae. They just released this last week on the 7th. For this survey that was conducted in August, only 59% believe it's a good time to sell a house. That actually decreased from 67% from 1 month ago. Also, the percentage who say it's a bad time to sell a home actually increased from 27% to 35%. That's on the sell side, but let's have a look at the buy side. Only 22% believe it's a good time to buy a home, and 73% believe it's a bad time to buy. Therefore, because of this increased pessimism regarding the housing market and also the economy as well, and also a lot of homeowners who have mortgage rates of less than 4%, that's really going to cause the number of new listings to decrease for the remainder of the year, in my personal opinion here. So that's reason number one why we may be seeing less new listings. Number two would be that we're not going to be seeing a lot of people who are going to be moving up. In other words, selling their house and buying a bigger and better house. So let me give you guys an example. I ran some numbers today and actually looked at what if I was going to sell my house and buy the same house next door in the same condition, the same size, basically a lateral move. If I was to do that, my mortgage payment would increase by 60% because mortgage rates and also home prices have increased so much. In other words, a lateral move doesn't make any sense for me right now because my housing payment would go up by 60%. That'd be absolutely insane. Here's also something that's insane as well, because if I was going to sell my house and buy a bigger home, then my housing payment would more than double. By my math, my housing payment would go up by 125%. And because a lot of people like myself have very low mortgage rates, that's going to give them very low motivation to sell their houses. The wild card for me is unemployment, because if a lot of people start losing their jobs, that could increase the amount of new listings hitting the market. All right, so changing gears slightly, let's talk about the number of price reductions on a year-over-year basis. So for the week ending June 18th of this year, we had 112% more price reductions compared to the same time period 1 year ago. But look at this trend though. For the following 9 weeks, the rate actually slowed down. We went from 112% down to 67% by the time we hit August 20th of this year. But take a look at the trends we're seeing right now, because for the 3 consecutive weeks now, this number here has been increasing. In other words, for 3 consecutive weeks, we've seen more price reductions compared to 1 year ago. And also the share at 74.4% is obviously far higher compared to 1 year ago. It's also worth noting though that this percentage of 74.4% is significantly less than we saw from June all the way until July of this year. And by the way, stay tuned, because I'm going to be sharing a summary in today's video, because there's a lot of information in today's video. And this video literally took me 5 hours to make. So if you guys are still watching this video, then please hit the like button. I greatly appreciate that. So let's talk about the share of price reductions real quick, and then I'll share my summary in today's video. So according to the latest trends we have from altosresearch.com, for the week ending September 9th of this year, the number of listings with price reductions is at 40%. The share of reduced price listings is at 40%, and 4 months ago, it was only 20%. So that share has doubled in the last 4 months. So here's a summary for you guys. Number 1, this has to do with inventory. Inventory is still more than 1 year ago due to less home buying demand, but we're not seeing the growth of housing supply like we once did earlier this year. And this is likely due to fewer new listings hitting the market for 10 consecutive weeks. However, though, Redfin as well as altosresearch.com are reporting inventory declines over the past couple of weeks. And number 2, if inventory continues to stagnate or decline and the number of new listings continues to decrease, that will likely soften the blow of this housing market slowdown. This would be drastically different if we had the number of new listings absolutely skyrocketing, causing inventory to increase greatly, which of course would cool off this housing market greatly as well. The big wild card for me regarding this is mortgage rates, because current mortgage rates are over 6%, and that should slow housing demand further. And number 3, the number of price reductions is much higher compared to the prior year, and the growth rate has been rising slightly for 3 consecutive weeks. And number 4, houses are taking longer to sell compared to the same week 1 year ago for 7 consecutive weeks. In other words, the housing market is still slower from 1 year ago. And comment below with your biggest takeaways from today's video. Also, if you guys got any value in this video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day, and look forward to seeing you on the next video.